Welcome to the Sunmall Podcast, where we interview the stars of e-commerce. Today we have Elizabeth Brown of Vanterra Capital, which is a leading e-commerce firm that invests from the early stage all the way to private equity. We're really excited to have Elizabeth here today. So really happy to have Elizabeth today. Elizabeth, maybe you can talk a little bit about your background, investment banking, and how you got in the world of investing and e-commerce.
Sounds great. And thank you for having me on the podcast. Just to give you some background on how I got into venture capital, out of college, I went to work in investment banking at Credit Suisse. My group was focused on ultra high net worth individuals and family offices, many of whom were first time entrepreneurs. And I always found myself fascinated with how these companies were so successful and built up from the ground up. Outside of work, when I had free time, which I did not have many in investment banking, I was always really passionate in the health and wellness space. I was that nerd that was reading nutrition books and researching different beauty brands to understand their ingredients and see how clean and efficacious they were. So I knew I wanted my next job to be a merge between my own passion in health and wellness as well as consumer investing and finance, which is why I landed in early stage consumer VC and at Vanterra.
Awesome. So I know Vanterra is whole life cycle and you're focused on the early stage. But are there any lessons you guys take from the late stage that you try to apply when you're in the early stages, or key lessons you've learned from the late stage?
Absolutely. So Vanterra Capital was founded in 2008 by my managing partner, Shad Azimi, as a fund seeding program. So we acquired GP stakes, otherwise known as anchor capital, and other private equity funds within a specific industry. Some of these have been in aviation, real estate, and healthcare. And we really bring that methodical private equity approach to the venture capital space through our rigor due diligence process, as well as a really intensive value add activity post-investment. And we also look to invest additional capital into the best performers over time in our portfolio, as we really don't see ourselves as one-time investors in a lot of the companies we work with, and we like to support them throughout their life cycle from the early VC stage as well into the growth equity and private equity landscape.
Makes sense. So when you're evaluating these brands to invest in, especially at the early stage, are there key things you're looking for, or things the brand can do well?
Yes, I always tell founders to come to the table with plenty of proof points of their product market fit. Ultimately, you need to show that your product solves a consumer needs better than any other brand on the market, and your economics are sustainable to grow. So at the early stage, things like proof of community, strong reviews, and repeat rates, I think are really critical. And then some type of eye to the future. How do you expand beyond the early adopters? And especially, how do you intend to use the capital that we invest in your company to continue to drive the business sustainably?
Makes sense. So really having the proof points, and then also talking about how you plan to expand in the future. D2C has hit hard recently, and just the overall economy. Do you have any advice for what brands can do, or key things for them to focus on?
Yes, so we're urging a lot of our D2C focused portfolio companies to take some sort of omni-channel approach to growth. While D2C still provides a really powerful channel, I think, to acquire new customers and educate them on their brand, I think a strong presence in retail is also really important in today's market. This can be in larger retailers like a Target or a Sephora, but can also be in some type of professional channel, whether that's a hair salon or a dermatologist studio. Finding ways to acquire new customers and increase your brand awareness at multiple different touch points, I think is really important for consumer brands in today's market.
Makes sense. So not strictly focusing on D2C, but also diversifying the channel mix. Is that more because the acquisition costs are lower there, or just alternative sources of revenue, or maybe they're not as competitive? What's the reason for trying these other channels?
I think what's most important is just meeting the consumers where they are. So a lot of times too, you can leverage your existing D2C consumers and ask them, what retailers do you shop at? How can we be more convenient to you and get the product in your hands? I think leveraging that community can be a really great way to, diversify your revenue streams and meet that consumer where they're looking to shop and see the brand.
Makes sense. So wherever the consumer is shopping, try to meet them where they are. Are there any kind of newer channels or newer stores that you're seeing that are effective?
Not a newer store, but a newer just customer acquisition tool. We're definitely seeing a lot of brands get to really large scale that are acquiring customers through TikTok. No surprise, this is a newer channel that can acquire a lot of that Gen Z and millennial demographic, which is really core to Vanterra's thesis in the health and wellness space. Our core demographic are those Gen Z and millennial consumers, as they're the most passionate about consumer brands, are always looking to educate themselves and learn about new products. And I think TikTok provides a really great platform to provide short snippets on your company so customers can learn about it. They can see how to use it. They can see influencers that are maybe promoting the product. And it can be a really innovative tool to acquire that demographic.
Makes sense. And I think a really great point is it really is good for that specific younger demographic. And then also it's video oriented. So it's useful for certain types of marketing. So one thing outside of the actual kind of brands, are there any kind of things you guys have been seeing in the e-commerce enablement space?
Yes, so one trend within e-commerce enablement that I'm really excited about is subscription enablement. As we talked about in the current market of rising customer acquisition costs, acquiring subscribers and improving the subscription experience is really important for brands because it can increase their customer lifetime value as well as reduce churn, two metrics that are really important for consumer brands at the early stage. Vanterra recently invested into a company called Stay AI, which is a subscription and retention tool for some of the highest growing consumer brands on the market today. It was a great investment for us because we were really excited about the thesis that they were going after and e-commerce enablement. And it's a great business for us to refer to a lot of the consumer brands and our portfolio and companies in our network as well.
That makes sense. Maybe we can dig in a little more. So, what exactly does that mean? So, obviously, you want to have subscriptions. So, there's like the financial part, but are there any other kind of things that business does to help with subscriptions?
Yeah, their biggest thing is they just make the subscription process a lot more flexible for customers. So you can pause your subscription, you can gift it to another friend for a week, you can have your own portal when you're going through. So it's really clear to choose certain flavors or certain sizes of your box and ultimately making it feel like it's a really easy subscription to buy into rather than some type of chore where you're scared about getting all these recurring fees, which I think is the consumer behavior behind a lot of subscription-based businesses for consumers today.
Makes sense. So, really giving them the control so they can like gift it or pause it so they're not worried about they have that subscription and they can't cancel. Are there specific industries where this subscription really makes sense and maybe some other industries where it doesn't?
Yes, and should also say that as investors, we love to invest behind industries that are tailored towards subscription businesses because they typically have really strong repeat order rates and high gross margin. And from an investment standpoint, that's great. I'd say industries that lend themselves best to subscription would be in the vitamins and supplement space. Many consumers take vitamins every day and have a really clear replenishment for when they're through them and want to get them the next month. Similarly, beauty and personal care, beauty products are something that consumers often go through on a monthly or quarterly basis and want to make sure that they have in their medicine cabinet for when they want run out. And then the last thing I would say is food and beverage. There's a lot of consumers out there that want their favorite beverage drink every morning, whether that's some type of coffee or tea replacement that frankly they're quite addicted to and want to make sure that they have on some type of subscription. Those are great companies to use a tool like Say AI.
Makes sense. And I think that's a really good point is industries or brands that have a high repeat order rate are economically advantaged because they don't have to keep acquiring customers. Are there any other trends you're excited about in the e-commerce enablement space?
Yeah, the one other trend that we're really excited about as well is just improving influencer management. We recently invested in a company called Super Affiliate, which provides word of mouth channels for growing consumer brands, ultimately affiliate links for consumer brands, like some type of beauty brand where influencers can post their own portal on how they use the product, and then consumers themselves can feel like they're buying from the influencer that's promoting it. Like we talked about earlier, as customer acquisition costs continue to rise, utilizing things like word of mouth marketing channels are a great way to acquire new customers and unique strategies. And also, it just really makes you feel like it's a personalized experience for the customer and continue to help grow the business.
Makes sense. So what I understand is basically, instead of having them refer all the traffic, makes it an easy way so the influencer itself can put a portal where people can purchase it. The conversion rate increases, and you're meeting shoppers where they are. Is that correct?
Correct. And almost feels like you're buying from the influencer's website themselves rather than, say, going to the consumer brand. And it just feels like such a personalized experience and really does increase that conversion rate.
That makes sense. So those were a couple investments you made in the enablement space. Were there a couple investments you made recently in the brand space?
Yes, so candidly, the consumer branded goods space has been a much harder space to invest in as of recent. No surprise with customer acquisition costs rising, it's been really difficult to find consumer brands with sustainable economics. One company that we recently followed on an investment into is a company called Oats Overnight. It's one of my favorite brands in the portfolio and ultimately is an on the go Oats Overnight product with 20 grams of protein, nutrients, and superfoods. It's something that I start every morning with. It's a highly subscription business with really strong replenishment. And they also get their customers really involved in the business process. So when you get a box each month, customers can vote on their favorite flavors and have created this really exciting flywheel experience where now I feel like I'm part of the brand development and want to continue supporting the business because I'm voting on the different flavors that they're continuing to launch.
That's awesome. I think you really hit a couple of the trends you were mentioning earlier, the high repeat order rate, having that community involvement where people are voting on each flavor. But like you mentioned, it's a little tougher right now for brands. So I kind of in the next series of questions, I wanted to talk about celebrity brands and maybe they have a little bit of advantage over the traditional brand. So I guess the first question I had is maybe you can talk about what makes a good integration between a celebrity and a brand.
A good integration between a celebrity and brand is when the celebrity is a trusted source in that category. For example, if a celebrity or an influencer is a trusted source of recommendations in the beauty, fashion, or apparel space, then I think it makes a lot of sense for them to launch a brand in that industry because they already have a built in community that trusts them and is consistently looking for them for recommendations. A great example of this is Hailey Bieber launching Rhode Skin. She was a model in the industry that a lot of consumers, like myself, always went to looking for her skincare recommendations because she has flawless skin and talked about it quite frequently. So when she launched Rhode Skin, so many of us were already looking for brands that she used and want to have skin like herself. And from my understanding, that company has been quite successful. And I think that was a really clear valuation on how a celebrity can get involved in a brand.
Makes sense. So they have that native following, and it's not just they are popular, but like they have that organic following for that specific category, and so people are already looking her up, and so they can follow that. So
Absolutely. It's all about trust and where the consumer is looking to get products from.
that makes sense. And so I think you used the Hailey Bieber example. So she decided to start the brand. So obviously they can post on the social channels on Instagram and stuff like that. But how have you seen celebrities, other than posting on social, be involved with the brand?
In-store brand activations are a great way for celebrities and influencers to promote their products in retail locations. So someone like Hailey Bieber going into some type of retail location where Rhode Skin is being promoted, walking in, explaining which products she uses, how she uses them, I think can be a really great organic way to bring customers into the brand. And I also know a lot of retailers such as Ulta Beauty are looking to invest in consumer brands backed by founders and celebrities and influencers with a really strong community that can drive additional foot traffic into their retail locations.
That totally makes sense. So, A, the celebrity can maybe help you get into some of these bigger retailers like Ulta Beauty. And B, I thought that was pretty innovative what you mentioned, where they're posting about being in store or in the store itself. So, not only can that drive digital traffic, but that might drive in store traffic too. Do you think launching the brand can also lead to additional? Not only does the brand celebrity help out the brand, but the brand can also help raise the celebrity's profile too.
I absolutely think that celebrities can benefit from being involved in a brand as well. A lot of today's celebrities became famous through some type of creative pursuit, whether that's acting or singing, but they have a lot of passions on the side in other industries that they're interested in. An example here that came to mind almost immediately was when Rihanna launched Fenty Beauty. For many years, she was getting her makeup professionally done, and she couldn't find any makeup products on the market that were inclusive and for women of color like herself. So she sought to create a product, Fenty Beauty, that had products that were available to consumers like herself and were more accessible for women of color. Today, Fenty Beauty is worth billions of dollars, and I now think Rihanna is known as a great representation of inclusivity and diversity in the beauty space. And I think it continues to improve her brand.
That totally makes sense. Yeah, what they've done at Fenty has been really amazing, and yeah, expanded out of the music category into kind of the inclusivity in beauty. Are there certain industries which you think are naturally conducive to a celebrity brand? Like I see a lot of like alcohol brands, for example. And then are there certain kind of industries that maybe are not susceptible to celebrity brands?
I personally think that celebrities should not be involved in consumer companies that come with some type of credibility risks, such as baby formula or vitamins and supplements, where science and clinical efficacy should be the large differentiator for the brand. I think it makes a lot more sense when celebrities are fit for food, beverage, and beauty companies that could benefit from some type of brand marketing and following from the celebrity that they are working with.
Makes sense. I think that's a really good point about for stuff like vitamins or health related stuff, you want to let the science be key there. But for other types of brands, which are maybe not as health or science focused, that celebrities can be more useful there. Are there any? So I think you mentioned Rihanna, Hailey Bieber. Are there any other kind of recent celebrity brands that you've been really impressed with, and also maybe they did some unique marketing or just something unique that you were impressed with?
Yeah, another celebrity brand that I've been really impressed with is a company called Chamberlain Coffee. It was founded by Emma Chamberlain, who has been a YouTube star for many years, who when I was younger, I followed. And one thing that always drawn me to her is she always talked about her coffee recommendations. Almost in every video, she organically was drinking coffee or she was driving to a coffee shop and she would talk about the flavors that she was looking for. So I thought it was a really organic transition when she launched her own coffee company, as so many consumers were already going to her for recommendations for coffee. I know something that they've done that was really smart is they did a brand activation here in New York City at Blank Street where Chamberlain coffee products were being sold there. Emma came into New York City. She went into a lot of Blank Street locations. She sold the Chamberlain products to consumers. She asked them questions that created a lot of organic buzz on social media and was really just a strong way to use Emma and get her out there in the market in a really organic way that consumers, I think, related to.
Makes sense. So she had that organic following from her YouTube videos, and then I think you mentioned like previously doing stuff in store. She went to these locations, talked to customers, sold the product, and that kind of generated the initial buzz there. Celebrities definitely they add value to the brand, like we've discussed before. Are there any kind of drawbacks or challenges of working with celebrity brands?
The largest drawback that I see is credibility risk, and this is why we only invest in celebrity backed brands that are able to stand on their own. They have some type of differentiation and are credible on their own without the celebrity backing. As we know today, celebrities can be canceled almost immediately, and if they're involved in some type of scandal and fall out of favor in the public eye, it has a really strong reputation for the brands that they're connected with, which is why I think brands need to have a lot of differentiation, a loyal customer following that would continue to buy the product, whether the celebrity was involved or not, is really important for us.
Any advice? How do you do that? Like you want to utilize the celebrity, but then also how do you make sure you're to the celebrity at the same time?
Yeah, I think it's really strong when brands utilize the celebrity, maybe when acquiring initial customers, whether that's trying on some type of apparel product or showing some beauty product and why it works for them. But then customer engagement from there on is really just through the high quality and competitive differentiation of your products. I think a great example here is Kim Kardashian of Skims. Growing up, I watched Keeping Up with the Kardashians. Kim was always wearing different shapewear products, but she consistently complained how there weren't products that fit her unique body shape and there weren't different shades that matched her color of skin. So when she launched Skims, I think it made a lot of sense because it was a category that so many consumers were already asking for her advice in. However, the business continues to grow because the products themselves are stellar. They're high quality. They continue to focus on inclusivity and diversity of body types. And they launch new products in category that consumers are really excited about. And I think that Kim does a great job of showing initial awareness. But after that, it all comes down to the quality of the products.
That makes sense. So the celebrity kind of gets that initial awareness, gets you through the door being a customer, but then the quality of the product, the new products that they're launching, that kind of keeps you engaged in the community and as a customer there. Have you personally or Vanterra, have you guys made any celebrity investments so far?
Yeah, candidly, we have not made a celebrity backed an investment. And I think it's because we haven't found any with enough competitive defensibility that we would invest in the brand, whether the celebrity was involved or not. That's a large part of our due diligence process, taking the celebrity away from the brand. Is this still a product that's needed in the market? Something that we always say here is why would we pay a premium to invest in a celebrity backed brand if strategics don't value it at a premium exit value? So the products themselves need to sell themselves. They need to be really high quality. And that's why we haven't been able to make an investment to date. But we are still really bullish on the category and would love to look at new investment opportunities.
That totally makes sense. So I think looking for some of the things we talked about with like the celebrity risk, diversifying, and also keeping customers engaged outside of the celebrity. So I think one thing you mentioned are exits. So maybe you can talk about, in the celebrity base, how are they valued? Is having the celebrity a premium? Yeah.
Like I said earlier, there haven't been many celebrity brand exits, so I think that this will be a really interesting question to continue to monitor over time. However, my guess is that strategics are not willing to pay a premium for celebrity backed brands because they're going to value it similar to other companies in the industry. They're going to focus on the same core metrics. Does the brand have strong differentiation, a really strong community, continuous revenue growth, great repeat purchase rate, and capital efficiency, all the metrics that investors we look for when we invest in brands in the early stage, I think strategics will look for the same thing. And one thing I think is a concern of celebrity backed brands is sometimes the growth can be really astronomical at the early stage, but strategics want to see sustainable growth over time. And I think that's something that they'll be really keen to focus on when they acquire celebrity backed brands.
That totally makes sense. There's not been as much exits in the celebrity space, so there's not as much data. But like at the end of the day, it's a business, so making sure the overall kind of metrics are good. That's what a strategic is going to require. In the limited kind of acquisitions that have been there so far, does the celebrity, tend to stay involved, or how does that kind of changeover kind of work?
From my understanding, I think it goes case by case and how involved the celebrity was from the start. And any celebrity backed brand that we look to invest behind, we want to make sure that the celebrity has some type of equity in the business rather than royalty, because that means that they have a stake in the company doing well, and that's their money that's also invested in the company. So at exit, maybe the strategic is acquiring their equity in the business, but they're still really passionate about how the company continues to perform over time. So I think many celebrities choose to stay on board and be more of a creative vision for the brand. But I do think it really comes down on a case by case basis.
It totally makes sense. Every brand is different, but really seeing that the celebrity is an equity person, what equity owner, like a brand, really passionate about, rather than just getting some licensing fee or some royalty there. I think one thing you mentioned was that the brands themselves, like strategics, are going to look at the metrics. Are there, obviously, it depends case by case. Are there any specific metrics that celebrity brands tend to have better or better at?
Yeah, I know one early metric that celebrity brands oftentimes benefit from are lower customer acquisition costs. When a celebrity is attached to a brand, they can have really strong brand awareness out of the gate. So they can acquire customers at a much lower rate than other brands in the market today that are maybe acquiring brands through Facebook and Instagram and TikTok and retail, where it's a really competitive market. That being said, over time, I think a lot of the other metrics stabilize across all brands, especially something like repeat order rate. While celebrity backed brands may be able to acquire initial customer, they still need to continue to get that customer coming back. They have a loyal following. Maybe that customer is even referring it to their friends. That's what makes a sustainable business over time. And I think celebrity backed brands still need to focus on that metric as well, in addition to customer acquisition costs.
It totally makes sense, right? So maybe you get that initial customer acquisition because the celebrity is giving you organic reach. But then all these other metrics, such as repeat order rate, you really have to focus on.
Yeah, celebrity brands that can often help you get customers' foot in the door, but the brand still needs to have some type of product market fit and solve a unique customer need to continue retaining that customer.
That makes sense. Are there any categories you would be interested in seeing more celebrities in that maybe they're not as many celebrities so far in?
So categories as investors that we're really excited about is the personal care and beauty space, as well as vitamins and supplements. We like these categories because they're typically high repeat order rate and have really strong gross margins. So as investors, those are industries I'm personally interested in. And then I think celebrities attaching to brands where, like I said, they're the trusted source could be really interesting. I know there's a lot of influencers on the market today that talk about beauty wellness products that they use in their day-to-day life. And I think it'd be really interesting if they launch brands of their own, ingredients that they look for in the products that they currently are recommending. And I think that'd be a really interesting trajectory.
Makes sense. Are there any kind of brands in those spaces, celebrity or not, that you think have done really good jobs or something, innovative? Makes sense. Any kind of resources, groups, podcasts that you found pretty helpful just analyzing the celebrity space?
I would say the best resource for analyzing the celebrity space is a newsletter and website called Celebrity Packaged Goods, which was founded by my good friend Dhruv Patel. I use it all the time for different companies that are bringing on celebrities or pre-launch and a celebrity is getting involved. I think it's a phenomenal resource for that space. In the general consumer industry, I love different newsletters like CPG Wire, CPGD, Exploding Topics, Beauty Independent, and Glossy. And then lastly, I will say I try to carve out time each weekend to walk a retailer, whether that's Whole Foods or Sephora or Target, just to see what type of trends retailers are promoting on shelf. And I think it's a really easy way to see how customers are interacting with brands as an investor.
That makes sense. Walking around these stores, any kind of trend you've seen recently that you've been excited about or some learning recently?
One trend that I've noticed customers are really interested in, as well as myself, is in gut health. There's been so much trending research around IBS and digestion and acid reflux for customers. And I've noticed a lot of retailers are starting to put more startups in that space on shelf. And it's also something that oftentimes, if a customer has some type of gut health issue, it's a relatively impulsive buy because they want to solve it like in that time frame. So I think it's really a great product to have on a retail shelf because it's kind of an urgent buy and something that customers continue to come back on and continue to purchase.
That makes sense. Yeah, I personally have heard a lot of my friends talking about gut microbiome, all those kind of keywords. So it seems like it's a trend that's growing. And then final question, this is more of a fun one. Is there a favorite brand or a really good shopping experience you've recently bought from?
On the gut health theme, one company that I continue to buy from that is in Vanterra's portfolio is a company called Array. It's a supplements company that's really focused on sourcing ingredients that are good for consumers, good for the environment, and are really efficacious. One of their products is a bloat product, which I use quite frequently after having a large meal. And the ingredients themselves are really clean and make me feel so much better within 10 minutes after taking the product. It's a really quick feedback loop, and it doesn't make me feel like I'm harming my body in any way. And it's one of their best selling products. So I continue to go back to Array and buy the product.
Thanks for listening to this episode of the Sun Mall Podcast. Please make sure to subscribe.